Not quite as eye-popping, I guess, as Meta, but still not too shabby to see the shares up by 5%, and in particular after the sales increase of 14%, and then the sales and, importantly, operating income forecast for the company's current quarter. Scott, I'll start with you on this one and kind of, again, high level, what stands out to you about Amazon?
Well, the operating income in the quarter is a massive beat. They guided at the high end at 11 billion. The consensus was below that. We were above that. 11 billion, the guide, just to be fair, was lower than what they reported in the third quarter, which only happened 2 times in the company's history, and that was during the post-internet bubble period. So it seemed pretty clear they were going to clear that hurdle. But at 13.2 billion, which is what they did in the quarter, you have a trajectory that's, leading the company towards kind of a 10% bogey in 2025 now, which is not something that investors were expecting. So the underpinnings of the business now, with the health of the retail business post-pandemic, the success of the advertising business, and now the recovery of AWS, supported by rising margins, we think Amazon has quite a long way to go from here.
And the level of complexity at Amazon always is kind of amazing in terms of all the different businesses that they're running. So if we look at where these sort of efficiencies are coming from, that's allowing them to boost that operating income, Aaron, what do you think that they have really improved the most here?
Yeah, there's 2 key things. One, I would say on AWS, which is a very high margin business. I think it was around 29% last quarter. We probably in the high 20s this quarter as well. So that's just a mix shift towards faster growth. Advertising is obviously a very high margin business that grew 27% year over year in the quarter. And then on the retail side, they've talked about better regionalization and shipping costs, which are reduced because of that. And so they've gotten really more focused on cost structure within the retail business. And so this is really starting to all come together now. Really kind of retail costs are under control. AWS had some reductions there, and then advertising still growing like gangbusters. So 2 of your high margin businesses seeing nice growth, and retail seeing better operating margins as well.
Well, and on that same point, Scott, how are you thinking about sort of the synergies between all these businesses? I mean, they talk a lot in this statement about, they've got, obviously they have Whole Foods, they have One Medical now that they're adding on as an additional subscription option for Amazon Prime subscribers. They've got the new ad tier on Amazon Prime, for that matter. Like, is everything sort of working in concert, or do investors need to think of this as just all of these disparate businesses?
I don't think it's disjointed. I mean, you bring up Whole Foods and healthcare, that maybe is a topic for a different conversation. But if you think of Amazon, in 5 pieces, the retail business is first party, third party, and a logistics business. There's an advertising business that's success is driven by the ownership of the marketplace. And then you have AWS that was built out of the infrastructure of Amazon. You could get away with AWS being a separate entity, certainly. But when you think about the AI aspects of the business now, with a cloud business integrated into that operation, I'm not sure that that's the case either. So at a high level, these are all very well integrated aspects to the business. Healthcare is a huge bet on the future, and layering that into Prime, because it's a huge problem that consumers have that Amazon is attempting to help them solve. That makes sense. Whole Foods, it's a project that's, I think they're still trying to figure out. If I'd say there's one thing in the business that's, not going as well as maybe anticipated, it would be that grocery business where they could still do quite a bit more work to make it better.
And then, Aaron, finally, when you're looking at Amazon, is there anything you don't like in these numbers, or is there risk that you're paying attention to going forward?
Yeah, and I think clearly on the call, I think the AWS growth rate will be a big focus for 2024. The AWS growth was slightly below our estimate. We were at 14%, but largely in line with the street for Q4. We would like to see AWS get back to mid-teens growth for 2024. And so we'll look out for any additional commentary on the conference call with regards to kind of the growth rate into Q1 and potential for 24.
Aaron, Scott, thank you so much. Really helpful context here as we try to make sense of these numbers, these rapid fire numbers coming at us. Really appreciate it. Thank you.
Great,
Thank you.